Hey guys, B Twice here. Today is Sunday, July 4th. Happy Independence Day. We're going to be looking at some of our recent wins and where they could be going here in these upcoming weeks or months. So to kick it off, I wanted to take a look at PLTR. Um, Somewhere back on this initial uptrend, I did a video on PLTR and I was calling for a wave 3 price target of somewhere around 25, I believe. And then ultimately a wave 5 price target of somewhere around 27. Um, so when I posted that video, obviously we were somewhere back here, and this is what I saw happening. Um, so when I first got in, I held calls until right around the wave 3 price target, and then from there I've just been holding shares. A lot of times I do that because there's some things called like a truncated fifth wave where you hit your wave 3 price target, you fall back for 4, and then wave 5 never actually breaks above wave 3. And not only that, but wave 3s are the most powerful, meaning that you're gonna see the biggest percent gains. So obviously, when you're holding options and you have those really big percent gain days, you can take your profits because the value of your option is going to skyrocket. So you try to look for the volatility to rocket, and then you can get out, and then you just hold commons or shares to grab the extra gains from there. So PLTR is a stock that I'm long, and I've been long for a while, and I don't plan on selling my shares anytime soon. But obviously, I like to use wave theory to scalp options. So I held the options all the way to wave 3. We pulled back for a 4, and then obviously I've just been holding shares since then. So I wasn't sure if we were going to extend a little bit higher from this 27 range. Ultimately, it looks like we did not. So what's happening now is that we're actually in a 5-wave move to the down, or a 3-wave move to the downside, but it's going to be a zigzag. It looks that way at least. I did a video the other day, and I was seeing that we already had an ABC move. After looking at it a little bit more, what I'm actually thinking is that we had a 5-wave move down to give us a 1. We pulled back for a 2. We had a 5-wave move down to give us a 3. We're going to pop to the upside for 4, pull back for 5. Then we should see a really good relief rally that should take us maybe even close to touching the all-time high again, but probably fall a little bit short, maybe into the upper 26s, maybe even it goes to only to 25. Either way, we're going to see some relief rally, and then we should see one final flush. Now, unfortunately, that final flush is probably going to take us somewhere down to between $23 to $20, somewhere in that range. It could go as low as 2063. It could go even lower. I think anything in this area is going to be a great dip buy spot, and this is the area you want to look to get back into options because then you're going to be in a true wave 3, and that true wave 3 is going to take us up to $38 a share. So I think on this drop, just because you don't want to be in the business of trying to call the bottom unless you're trying to trade options for a pop, if you're buying shares, I would be buying on any dip day, just because ultimately when we do catch support, we should see a major rally taking PLTR up to $38 to $40 a share. It just depends on where it finds bottom, and then we'll be able to find the wave 3 price target. So PLTR, I am long. I do like it long term, but now is definitely not the time to be buying calls. All right, so let's take a look at Tesla. So Tesla, I was back and forth between for a little while based on what it was doing. Um, what it was doing in the market and whether or not it was going to overall go the bearish route and head down to the 425 range, or if it was going to go higher and go test all-time highs again. And it was doing just a whole lot of random stuff. I was watching the S&P 500 on a daily basis and seeing how like some days Tesla was completely lagging it. So I'm like, man, the bottom's going to drop out on this thing. And then as weeks progressed and I kept like watching and watching for the bottom to fall out, I started realizing this triangle was developing. And that's why somewhere right in this range, I made a video about how it was in this triangle and it had broke above. I think it was like right here, and that it was a buy and that we were going to soar up to this 660 range. Now, even the bear count, I was still calling for us to go to this 660 range. So I did know there was going to be short-term upside. I just didn't know if it was going to get rejected, which it still obviously could, and head lower, or if I was favoring the bull count more and that it won't get rejected and it'll be sent higher, it'll go 720 and above that. But either way, so we were calling for this breakout. The breakout happened, and then within a day we ripped from right around this range. I think it hovered here for 2 or 3 days, and then it rallied in one day all the way up to touch that downtrend line. Now we've been in consolidation mode ever since. I think a week or two ago I posted a video saying that I think we found wave 4 bottom. I stand by that comment. I think we did. We still could go a little bit lower, but I think all dips on Tesla right now are a buy. We still could go down and touch the 660 range and still be a valid wave 4. If this is an extended correction, we obviously could have just had this be our peak over here, and then the wave 4 could be over here. But with that being said, I don't see that. I do think we've already bottomed for wave 4, and that very soon we're going to see this rally up for our wave 3 price target. It's this cream colored wave 3 price target of 720. From 720, I do think we're going to pull back to touch this downtrend line. We'll hold that support because a lot of times when you go above, when you get a breakout above a downtrend line, you pull back to retest it. When you pull back to retest that downtrend line, that's a great spot to buy calls because it's little low risk, high reward. If you break below the line, then you just take your loss and you walk away without losing too much money. If you hold it and you just bought there, you're going to see this face ripping rally, and it's going to take us into the 800. So I'll continue to watch Tesla. I did get in back here. I'm waiting for the 720 range to take profits, and then I'll be waiting for a pullback to go long again. But it is going to be volatile, so we have to really watch it. And just if it does break the 660 level, you really want to take notice of that because it ultimately could be breaking to the downside for this bear price target of 425. So you definitely don't want to be riding it for that entire loss. All right, so Etsy's another one. So Etsy's one that we had a similar type situation where I was calling for this breakout of this triangle. Um, and my wave 3 price target was about 200. I saw us pulling back for a wave 4 and then ultimately going up for a wave 5 price target of 206. It actually doesn't get more textbook than this because it unfolded exactly the way that I was calling it would. I got in back in this triangle and I rode the entire wave up until the top of wave 3. I sold most of my options. I'm only holding one free position now just for shits and giggles to see if it does uh, break above wave 5, but ultimately what ended up happening was it hit wave 5 and it died off, and now we're in the process of this pullback. Etsy's another one that I'm long shares and I don't really scalp them. I just try to use wave theory to scalp the options, but I'm extremely bullish Etsy long term, and right now what we're looking for is we're looking to go down for this wave 2 bottom. So we've already had our slight pullback. I'm seeing this as an A pop up for a B and that we're going down to find our C. So what I actually like as a great dip buy spot is somewhere between the 190 to 187 range, which is the 38.2% retracement. So that is a shallow wave 2. I did put my wave 2 price target for here. A lot of times you're going to go all the way down to the 61.8% retracement. I just think 175 is really low for this stock right now to drop to without an overall market correction. So it still could happen, but either way, I do see a great dip buy zone somewhere in this 187 range. And if we can get all the way down to 187, at the very least, we should see a rally to get us back up to 200 before ultimately being flushed all the way down to 175. So regardless, I think if we get to 187, it's a great spot to get in. I would start adding at the 190 range, and if it goes all the way down to 187, I'd add more because we should at the very least see a three-wave move up to test 200 again before ultimately either going lower or ultimately breaking um, the plane of this 206 and sending us higher. Once we do bottom for wave 2, we could get somewhere in the 260 range for our wave 3 price target. So we'll definitely want to be watching for this and definitely want to get in when we do think it's getting close to bottom. Okay, so Amazon. Amazon, I posted a video at the exact same time that I posted the video on Tesla saying that we were looking for our wave 4 bottom and that I thought the bottom could be in. But I did warn that, hey, we could head a little bit lower, but that was a great dip buy spot. So basically what I see is that we went up for 1, 2, 3, 4, and another impulse up now to finish off this yellow wave 3. So basically what I'm saying is that we did bottom at the 38.2% retracement, and that we're going to be heading up to 3,800. And I think we will see this before the next earnings report. So don't be surprised if we see Amazon continue to rip. It went up 2.5% on Friday. I think pretty much a good piece of last week, even on Monday and Tuesday, I kept talking about, hey, buy Amazon, buy Amazon. I still think that we are going to be going to surpass all-time highs and go up to this 3,800 range in short order. And then from 3,800, we'll probably see a decent pullback. So we definitely want to be taking some profits off the table at that point. But we'll continue to watch this name, and hopefully we can find some strength as it will help carry the overall market through July. All right, so Facebook. Facebook is one that I actually was waiting for a bigger dip to get in, and then ultimately when I saw this, I bought in as it was pulling back. So I think most people probably followed the news and saw that the antitrust lawsuit was dropped against Facebook. It rallied from the 340 range all the way up to 360 or whatever. So I was actually in this 340 range watching. I wanted it to come down into at least 330s, maybe even lower. I was really hoping that we were going to see a three-wave flush across the NASDAQ, and then I was going to be able to buy Facebook on that three-wave flush. Ultimately, that didn't end up happening. We kept having these shallow dips, and then next thing you know, they drop this antitrust lawsuit and Facebook just rallies. And this is one of the antitrust lawsuits, something that's been holding Facebook stock back for quite a while. It's one of the most undervalued big tech names. Pretty much every analyst across the board has a price target of 380 or 400 or better. So with all of this being said, that's why I really like Facebook and watching it to try to find these rips as it rallies higher to try to get to this 380 range. So with all that being said, when I saw it get that rally from the antitrust lawsuit, obviously it had a three-wave move back. You can see it 1, 2, 3. So then I got in somewhere around this range, and I'm looking to ride Facebook up to 380. So with that being said, I do still think Facebook right now is a buy. I think all dips on Facebook are going to be a buy. Short of them getting hit with new lawsuits, I do think that we will see this 380 range before earnings, and then depending on how earnings goes, it could send it soaring into the 400s, or we might end up seeing a pullback. But like I said, all dips on Facebook appear to be a buy. All right, guys. So if you like these videos, go ahead and hit a like and subscribe.